All right, so as we were talking about the market, give you a recap of the market. We talked about how during the open, we gapped down about 1.5% on almost all the major indices, and as you can see on my screen, throughout the day, we kind of rallied back. Test the previous day close, rallied again, test the previous day close, rallied again. Really correlated move across all the equities. So regardless if it's a large cap or a small cap, very, very correlated move. Andrew, walk us through your trade today. How was your trading day, and why did the market gap down? Because you had some really interesting explanation on why it happened.
I think the market gapped down because the Target news came out that they have a lot of inventory, and Target is obviously one of the big retailers, and it was gapping down almost 7%, and that's a really, really bad news for the economy. That something like Target, if you look at my chart, in the pre-market, we gapped down significantly, almost 7-8%. And now at the open actually recovered. As you see, it bounced back from 145 all the way. It's only down 2% right now. And this is what happened. The news came in and they said the inventories are high. It means that now they have to discount the prices down. And the reason that inventory is high is people are spending less and less, and that's a bad sign for the economy. But it seems that maybe markets and the whole market came down because, again, the fear of recession and people don't spend money and the economy is shrinking. But it's recovering. IWM is leading the way with 1.4% small caps. Apple, all of them started red. As you see this drop with all of them, they were the same drop that they all had that. But eventually it's now coming back. It means that, the market doesn't believe that we're going to go into recession, or that news it wasn't enough.
The million-dollar question is this going to last? Is this rally going to last, or no? We're going to continue to chop?
What do you think, Adi? Do you think it's going to last?
That's a great question. So before I touch on that, this is a really interesting chart I saw on Twitter, and I've discussed it in the chat room many times as well. So if you're a part of our chat room, Bearable Traders, you've seen me note this. This is a year-over-year change on inventory, aggregate of Walmart, Target, Costco, Home Depot, so a lot of the retailers. Year-over-year inventory is the blue line. Year-over-year sales is the orange line. As you can see, obviously these things are moving really close to one another because of the just-in inventory system. So the inventory comes in, people buy. As people are buying, the inventory is coming in. In 2020, because of the COVID and supply chain, there was this massive disconnect of sales and inventory. So you're seeing this inventory build up firsthand. And I've talked about this a lot. We say there is inflation, there is disinflation, and then there's deflation. When prices get so high, we usually skip the disinflation part and go straight to deflation. So when Target is not selling their inventory, when Walmart is not selling their inventory, they have to mark down their prices aggressively to get rid of this inventory. So you go from increasing prices all of a sudden to decreasing prices, especially if there's a growth scares and consumer is not spending as much. So I thought that was really interesting. But again, market kind of rallied a lot of those losses.
Yeah, market is definitely making on a daily chart. SPY is making like an engulfing, which is a very, very bullish pattern. And it gapped down and is now moving higher. So there are some good news are coming on the inflation side. China is easing down their complete lockdowns, and they are slowly opening up the borders. It means that the Chinese economy, which is very, very correlated to the Western economy, is getting better and better. And if China gets better, obviously the whole world is getting better. There are still energy prices are really high, so we are far from to getting back into the old energy prices. But there are some good signs. One of them is the North America fertilizer price index has come down. Almost 20%. It means that the food is going to be lower. That's the price that it was peaked last year. Shipping spot index has come down. It means that the shipping cost is going to coming down, and also the semiconductor index has come down almost 20%. That means that the semiconductor prices, which impacts our TV, laptop, iPhone, dishwasher, any of the electronic device that we're using, the prices are coming down. That doesn't mean that the prices are going to come down back to where it was the inflation, but that's a good sign.
Yeah,
market bottoms only when we see that we really see the macroeconomic indicators are going into the right direction.
Yeah, exactly. I want to touch base on what you said about the engulfing pattern. So we know this is really a strong whenever you have a red candle and then the other candle is like a bullish candle and kind of takes over the previous day close, and we're going in that direction. So this could be a bullish, if you're a technical trader, you're mostly trade on technical indicators. This is a pretty strong buy signal. So we have to see what happens tomorrow. Of course, Friday we got a big day with the CPI number coming down. So if the CPI comes in hot, stocks gonna get slaughtered. If the CPI comes in better, a little cooler, stocks and bonds, they'll probably both of them will rally. I want to touch a little bit, I want to get into a little bit more details about the stuff you talked about. You send it in your newsletter. By the way, Andrew, I have to give you a massive compliment on your newsletters. They're getting really, really good.
Thank you so much. I appreciate that.
So if you're not part of Andrew's newsletter, make sure to sign up. A lot of people are signing up, massive growth in there, and it's fun to read, but there's lots of nuggets and really interesting information in there as well. So you talked about the cost coming down on 3 major areas. If you can see my screen, you got here for the shipping index, which is the spot rate for shipping. You got for fertilizer, and then you got for chips, and you can see the trend is obviously on the way down, which is the right direction. One other thing, Andrew, you mentioned in your newsletter that I thought was really interesting was the data that the Bank of America released on consumer spending. You want to touch on that?
Yeah, so the data came in. That's the chart that Adi is showing right now. So consumer spending is still as healthy. That's Americans are spending money, which is good for the economy. In the recession or in the depression, nobody wants to spend. So the spending is high, but year over year, inflation adjusted, it means that they're lower. That means that they're spending more, but they're taking less stuff home, which is obviously one of the reasons that inflation is impacting. So that's also something that to consider. Consumer sentiment is something that, the sentiment of the consumers has come down and everyone is a little bit afraid. I don't have any financial problem, but I'm not really spending as lavishly that I was doing last year. It's just that my sentiment has come down. And I think it's all across North America that this situation is.
Yeah, very interesting. So if Santiago, our producer, can go to my screen, this is what Andrew is referring to, a very well chart. So you can see the green line is the 2022 spending, obviously higher than 2021, which is the gray line, and the 2019 and 2020. So still consumer on average are spending more, but you can see in this past three months, especially around the same time there was a lot of talk about recession, this spending is no longer going up. It's a flat line, so it's no longer going up, which this is a beauty of these leading indicators, is when the sentiment is down, consumers will spend less. So when they spend less, then that means lower earnings. When there's lower earnings, then market goes down. So all of these things kind of link to one another and lead into market going down, earning forecast and guidance coming down. So that's one of the reasons we call them leading indicators, because they tell you a little bit what's going to happen in the future. Very interesting stuff.
Yeah, the whole stock market is following the economy, and it's just a perfect match. And I noticed that recently my mood is also the same as the financial market. It's just because when the economy is good, market make all-time high, everyone's happy, spending comes down, everyone is going into the shrinking mode. And you just have to look at the macroeconomies. They're completely correlated. And look at the chart, Adi. For example, you mentioned that, we go to the daily chart. Right now, you see the candlesticks are either very bullish or they're very bearish. You don't see, and the size of them are really big. Like this is, for example, a really interesting chart. 3 days ago we had a very bullish move from below 400 to almost 415.
Yeah.
And then we had the day before we had a drop, and then we had a really bullish candlestick. So it means that the market is really driven by very short sentiment of fear and greed. And news comes in that, the inventory of Target is up, the whole market gaps down.
Yeah.
They shouldn't have an impact like that, but it means that the market is really into this fear and greed situation. I think we're going to stay here for a while. I mean, where do we end for the year? It's unlikely that we go to the all-time high, but I doubt that the market has really want to, at least S&P 500 want to go significantly down. Maybe we chop around for the next couple of months here.
Yeah, exactly. The low of the year so far, the 52 weeks low, was this candlestick on, I think it was a Thursday, which was about 380. I think 382 was it. And since then we rallied a little bit. Now we're kind of consolidating, making our way if you want to move higher or move lower. So it will be interesting. If you're a swing trader, really difficult market, like
Very
really
difficult
challenging
to, yeah.
to find out the direction in this market. If you're an option trader, on the other hand, you know, there's tons of stuff you could do. You could use condors, volatility is high. You can use condors, short strangles to make money. And that's one of the reasons, like, we teach option trading, we teach swing trading, is because it's about tools in a toolbox. The more tool you have, the more equipped you are to make money in different market sentiment, in different market regimes. So, you know, something to talk about. We're really interesting. What did you trade today, Andrew?
I traded today Amazon. Amazon was my best trade. I made most of the profit on it. Amazon. Let's go into the trading terminal, into the 1 minute chart. So I had this 1 minute opening range breakdown on Amazon. So that's very easy going here. Yeah, so that's one 1 minute opening range breakdown that I had. Let me bring my Epic pen here as well, so I can show it to you in my chart. Yeah, so that was a 1 minute opening range breakdown that I did on Amazon. That was really nice. After that it bounced back, but I really didn't trade it anymore. And I did a couple of other scalps on TQQ and AMD as well, but that was essentially the #1 trade that I did on Amazon. This was the VWAP was around here, and I did a 1 minute opening range breakdown.
Very nice. Yeah, that's pretty amazing. You traded TQQ as well. You just didn't hold.
I did trade TQQ actually,
Yeah.
but I just didn't really want to. TQQ showed really solid moves to the upside and downside, but I just didn't really hold it. Let's, for example, here on TQQ. Yeah, at the open, you know, I did this ABCD pattern on it for this breakout, and then later when it went through the green, you know, there was a really nice ABCD pattern with heavy volume. So it was a really good day trading TQQ on the tech sector generally.
Yeah, very amazing. Yeah, I traded Shopify and Tesla, and Shopify had a news today that basically their board of directors approved a 10-to-1 split happening soon. So Shopify will be about $40 instead of the $300. And again, these are supposed to be non-events, and the stock shouldn't really move. But as soon as the news came out, I sold tons of puts on Shop and you know, captured the premium. Shop is now up 5%. It was down about 2% in the start of the day. So a 7% move in span of 1 day. If you want to talk about volatility, how much volatility there is in the market, there you have it. If you go to my screen on a daily candlestick, you know, a massive kind of a massive move from not much of a movement in the last week.
Yeah, I see the Shopify had just collapsed from the highs of $1,750, almost $1,800, and now it's trading at $379. That's crazy.
Definitely. Any major earnings happening in our calendar? Let me go to our calendar here and see if there's any good earnings after hours. I don't recognize any of these companies. I don't think they are.
No, based on the market cap, I think Trip.com is Trip.com has the $20 million. You know, the good thing about our calendar is that you can actually have them sorted based on the market cap. SAGM, you know, I don't know any of these big companies. They're really smaller cap companies. And yeah, so we'll see how it goes. It doesn't seem like a very crazy market for the earnings.
No, yeah. DocuSign on Thursday, I'm looking forward to that. You know, DocuSign was one of those pandemic stellar stocks that like doubled, tripled in a span of a few months. And then obviously didn't have it's been having a really rough year, mid 2021 and 2022. So They're doing after hours on Thursday, so this is one of those names I'm going to be looking at. Maybe a potential straddle or a strangle on these could really work out on DocuSign. So if you're an option trader,
yeah. If you have any question about my recap or my trade, guys, feel free to putting it here. I'm happy to answer that. That how we traded. It was a really good trading day. Really nice scalping.
Somebody asked, Andrew, have you ever seen this type of volatility in your trading career?
Yeah, I think we have. So the volatility has been in the past. I mean, the mother of all of the volatility was back in March, April 2020, when the pandemic happened. But it was a short period. You know, it was like a V-shaped recovery, and the volatility really ended soon. But the 6 months, 7 months volatility like this we're seeing right now is not something that I've seen very often in my trading career. I mean, it's been almost 6 months that you can trade the indexes very easily. Yeah. Look at the chart, by the way, on Bitcoin. Look at this huge recovery that you have seen.
That's so exactly what I was talking about.
This is crazy. And, you know, we have had times that the market has been volatile, but this long, no, I haven't seen that.
Yeah. I think that's a great question. What I would suggest in answering this question is like, you know, always look at the wicks, right? So if you know wicks of 25, it means market is volatile. Usually, historically, is around 18, 19. So overall, a volatile time, but nothing crazy. Even when you look at wicks, usually in like bear market or crashes, you have wicks spiking to 40, 45, 50, and then comes down, and that marks the bottom. We haven't seen that. That's one of the reasons a lot of people don't say that we've bottomed yet, because we haven't seen that, you know, capitulation or like that wicks spike in the market yet. But we don't necessarily have to see it, you know. Bitcoin is going green. That is pretty remarkable. That chart, the way it looks.
That looks like a mother of all recoveries, the V-shaped recovery, yeah.
Yeah, Salty is asking what will it take for energy stocks to do a parabolic reversal, and Timmy is saying are there more layoffs coming? So those are great questions. Those are actually talking points for our show today. So let's get into the slide deck for today, and stuff that I wanted to talk about is one of the reason and one of the news that came out today, Andrew, was World Bank cuts global growth outlook. So that was quite interesting. Global growth outlook is now only about 3.2, I believe. You know, there's a lot of recession talk, so we know inflation is high. If the growth is slowing down, this is kind of your stagflation. This is a central bank nightmare, right? Because there's nothing they can do once the economy goes into a stagflation. Not a good news. So one of those things that is happening. I thought
stagflation is when you have high inflation and you do not have any growth in the economy.
Yeah, so you have recession and you have high prices. So it's the worst, right? You can't raise the interest rate because you're in a recession. At the same time, you can cut the interest rate because the prices are so high.
What makes that thing? Usually, a shock makes the you know, like energy price shocks. You know, pushes the prices higher, but at the same time, it's out of your control. I think it was the oil embargo back in 1970s. We had that.
Yeah, 1973. I think we had a stagflationary environment, and I think in the 80s we had really high inflation where Volcker came in and like raised the rate really aggressively, took U.S. to a recession, but brought down inflation down, right? Mm-hmm. So it was successful. But yeah, so I mean, if you got price here and you got quantity here, and this is your supply, and this is your demand, and this is your supply. If there's a shock and supply goes down, like exactly what's happening right now with the oil and the war, and there is consumer sentiment fear, so your demand is coming down, or actually there's tons of money printing going, and your demand is going up. You got prices going parabolic, but growth is not happening. So you go from here. So, you know, it's a nightmare basically for a Federal Reserve or any type of central bank to get this under control. And there's usually pain, and one of the pain is layoffs, right? We're gonna see layoff, which is one of the stuff that I wanted to talk about for today. Regardless of, we'll get to Elon Musk, but Coinbase. So, do you know about Blind, Andrew, on Twitter?
No, I don't.
Blind is basically it's kind of a community of especially tech workers. Like a lot of tech workers, if they work at Apple, Google, they all go to Blind and they talk about their salaries and their work condition. It's supposed to bring transparency. So they say, hey, I'm an engineer, I'm a full stack engineer at Apple, I make 200K. So then a person at Google will see, oh, they're making more. So it's all about transparency. So there was a memo leaked in Blind that, Coinbase hired a bunch of software engineers, and promised them that they're not gonna take back their offers. And 2 weeks after, they sent out an email and said that they're taking away all the job offers, right? Especially because market was really scary. So it got leaked in Blind, and now it's making a huge noise. And who was it? I think Timmy talked about layoffs coming. Yeah, we're seeing it in private sector already, layoffs, but we're also seeing it in like earlier stage tech companies like Coinbase, like Robinhood. Robinhood was the first one to lay off 10% of their staff.
Yeah.
Now we're seeing it in Coinbase as well.
Yeah, so there are a lot of companies that they call them zombie companies. That these companies are not really producing enough revenue to even pay their financing and their debt. And that's why they call them zombie, because they're really not alive. They're running only in the environments that the interest rates are low and they're easily financially, the grants and investments are available. But when you go into the cycle of financial tightening, a lot of those companies have to go out of the business because money doesn't exist. Even in the private sector, the VCs are telling their portfolio companies that you cannot count on all of the promises that they had, in the previous rounds, and they have to be ready for to survive. In the public market, we see, I think the news came in that from Russell 3000 small caps, it's almost 670 of them. They don't even make enough revenue to pay their debt. Yeah. It's like that you're getting a mortgage, but you don't even have enough money to pay your own mortgage, let alone everything else for the salaries and everything else. So that's really bad. And those companies are going to go down, and they're going to get eventually delisted and bankrupt. And the cycles are very important, the business cycles. And the executive of those companies, and any companies, from Apple, that is the largest company, all the way to those small companies, they have to make sure that how they can survive this business cycle. And obviously, research and development and expansion is one of them. The first thing that gets hit, everyone goes into the cash reserve and conservation, and until this phase passes. Yeah. So I'm not surprised that Coinbase 2 weeks ago was committed, and 2 weeks later, when the price, like 2 weeks ago, I would be, 2 weeks ago, Coinbase, look at my chart, was trading at $125. Yeah. It's just that huge drop that you see the early May. And now this company is worth almost half of that price. Yeah. So that impacts their finances and their hiring and their everything in that. So I can see this huge 3 to 4 days sell-off on Coinbase can impact the operation of the company.
Yeah. So, Sal, to answer your question, are the layoffs coming? They are coming, and we're seeing a little bit of uptick in number of unemployment. However, in a grand scheme of things, in the actual data, it still looks like the economy is really robust because we're losing these jobs in tech and startups, but service sector is still gaining jobs. So those gains in the service sector is kind of canceling out these tech jobs, these high-paying tech jobs that are being lost. So overall, when you look at employment, it's still very healthy, but it doesn't mean that the economy is not slowing down. So you got to actually go a little further, look at the data, the job report, and see where are the gains and where are the losses. And you can actually see that majority of the gains are in the service sector. That's your restaurant, your coffee shops, and majority of losses are in technology, things.
100%. I mean, the company can lay off a lot of people, but at the same time has hiring in different areas. Like, for example, you can let go of some of your R&D and expansion, but at the same time, you can increase your hiring in a different area. Like oil and gas companies right now, that's the situation that they have. So they're not motivated or incentivized to do any expansion or R&D. So they might actually let go of their scientists in the R&D, but they hire more technicians for the production to increase the production that they already have. So, but overall, I think you have to see the employment number. It seems that the unemployment claims are going to go slowly up, and that's cools down the employment market as well. And that's why you see, you know, a lot of time you see in the middle of a crisis, a lot of these C-management, CEOs and executives of these big companies are getting really big bonuses. And a lot of them, people are asking, so if the company is losing and it's a bad situation, why this CEO and why this board gets such a huge bonus? I think the bonus is for acting properly and surviving, you know, a hurricane. You know, that doesn't mean that I remember that, for example, Sears was one of the public companies that they were in a very, very bad financial situation, but the management got good bonuses because they acted well to save so many other companies' assets. That's why they're rewarded for, you know, being smart enough and taking actions on that area.
Yeah, definitely. It's a sensitive topic whenever there's layoffs involved because it's people's livelihood, but you know, that's capitalism. Speaking of, you know, these layoff and these bonuses, Elon and Tesla, they said they want to cut staff at about 10%, right? So the news came out, I think, last week. Tesla gapped down a little bit. But there's something really interesting, Andrew, that I wanted to talk about, especially with these bonuses. Inside its package, Elon Musk package, payment package, with all the options and stuff, he got paid about $25 billion last year. So if you divide that 25 billion by all the cars, about 3 million, 2.5 million cars that Tesla has produced so far, that means every time Tesla has sold a car, like for 60,000, 70,000, Elon has got a $10,000 bonus. And you know, recently Tesla came out of the ESG index, and he took to Twitter and he talks about, this is ridiculous. I've done so much for environment. But ESG index is environmental, social, and governance. And the governance in Tesla is horrible. I mean, what kind of a business model would reward its CEO $10,000 per car? You know, I mean, people would say, oh, it's going to be the most valuable company, blah, blah, this and that. But we don't know how much he's going to get paid continuously, right? So it's been... Anyway, there's a lot of this is up for debate, but
I think this is one of the, you know, the longest standing debates that capitalism versus socialism has. You know, that it's not even a new age. You know, back in 1816, you know, Karl Marx in his book Das Kapital, you know, argued about that how workers devote their time to their employers, the capitalist people, and even when they're not working. And that discussion of the business cycles and all of this goes back in, you know, hundreds of years ago. And, you know, the world has gone into the Cold War and, you know, real war through this. And this is the way that capitalism works. And unfortunately, there are sometimes you see something like that, but overall, you know, Soviet Union failed because they just didn't incentivize creation and you know, entrepreneurship. And West survived because they're just they're constantly incentivizing people who create, people who are, you know, breaking through the paths and you know, scientific breakthroughs. But that there is no right or wrong answer on that, I would say. But if Elon Musk didn't get this much paid, then he didn't have enough you know, incentive to start this company. You know, that's you also have to look at it this way, that he's also, how many people are working at Tesla right now.
Definitely. Definitely. You know, we are not arguing you know, the job creation and the value creation. Definitely. Of course, if you bought Tesla at $50, you'll be really, really happy regardless of how much Elon's getting paid. This was an interesting chart, Andrew, I saw. So this is, you know, you mentioned this in your newsletter as well, that the ports and the supply chain is easing down. As you can see, it is coming down. This is a deviation to average. So things are getting better, but still it's 2 standard deviation away from average. We know this happens like once every 300 times. So it's a very rare event happening.
Yeah, I mean, nobody really is expecting that the inflation goes back to the 2% anytime soon, but we just want to know we have a clear path towards controlling the inflation. I think all of the studies has shown that the inflation is going to be 4% in 2024. So in 2 years, we're going to get inflation of 2%. So nobody really believes that they can control inflation in a short period of time. But as long as we know that the supply chain disruptions are going to going down, energy prices, hopefully the war in Russia, in Ukraine ends. I mean, that's people, really hopeful for that.
Yeah. Yeah, definitely. So market closed a few minutes ago. We got quite a lot of people joining us in the live. Welcome. This is a show where we talk about the market. We talk about trading. We call it the market close or the closing bell. If you're new to our channel, definitely subscribe. Give us a thumbs up. We run this show Tuesday, Wednesday, and Thursday. So tomorrow is a special day, Andrew. We're having our first guest. It's one of our traders, and his story was so inspiring that I thought to myself I should bring him on the show to talk about his experience. He's been trading for a while, and now he's been really consistent for about a year. So one of the things that I wanted to do with this show is showcase people who are so living the dream, are able to become consistent, and maybe they say one thing in the show that clicks for everybody else. So if you're part of Bearable Traders community, if you've been trading with us and you're consistent, shoot me an email, and I would love to bring you on as a guest to the show. So tomorrow we'll have our first guest. That's why I'm really excited.
Yeah, 100%. We're always looking for success stories, even failure stories, as long as we can actually get something out of it. So feel free to reach out if you have something to say for the community, guys.
Yeah, when I mentioned this in the chat today, somebody said, what about failure stories? Sometimes you learn a lot more from failures than from success, and I totally agree with that. If you feel like you have a story that you want to tell, shoot me an email, we can have a chat, and then if it's good, we'll bring you on the show. We'd love to have you on the show. In the chat, in our chat right now, in the live chat, there's a little bit of conversation going on about Cardi B. Do you know this story?
No, what is Cardi B?
You don't know? Okay, so let me go to Twitter. Cardi B, she's a rapper. She's a hip hop artist, and she's kind of politically active. She talks about political stuff, and she recently tweeted, and she said, I'm trying to find the tweet. She said, let me see if I can find it. I can't find it, but anyway, she tweeted and she said, when are they gonna tell us that we're already in a recession? My question is two things. Number one, who's they? Every time people want to talk about some kind of conspiracy, they use they. I would love to know who's they. What do you mean, when are they gonna tell us? It's GDP is 2 consecutive negative growth for the economy. We're not there yet. We're talking about maybe in the future. But some are saying when your favorite rapper is talking about recession, that means we've bottomed.
We've already bottomed. Yeah. Well, then potentially, I can actually see that. You can show that in my screen, Santiago, that when you all think they're going to announce that we're going into a recession. So recession is a phenomena that if the economy is shrinking for 2 quarters, you're actually into a recession. And if it's more than 2, and if you go into the 4, it's going to be a depression. Yeah. But this is something that you feel it. And everybody is feeling it. There is really no point. Like a bear market, like 20% drop below that is a bear market. But that's just imaginary number, that 20%. There's nothing, the market doesn't change after 20%. It's just they say that you are in a bear market means that the prices are too low. But I think we are already in a recession. We are seeing a recession. But the question is it going to be a hard landing or a soft landing?
Yeah.
A hard landing is you really hit everyone, the layoffs, and people really need to go into this conservation mode. Or the soft landing, it would be in a way that nobody would really notice that, and slowly you go back into the growth.
Yeah, definitely. I'm just reading the chat right now. If you see me looking down, it's because I'm reading the chat, and some of the comments are hilarious. Someone's saying Cardi B is the most famous strippers in the world. Well, she was actually, her background was she was a exotic dancer or a stripper, and then she became a rapper. And there was a lot of saying that they're saying a strip club is a leading indicator. Apparently, Norm was telling me there is an index called HESI that looks at these luxury adults entertainment spending, and they talk about this is usually a leading indicator as well into economy slowdown. And if you look at HESI index, it's showing that there is a slowdown. So that was really interesting. When we were having that brainstorming session for Trading Terminal to what indicators to put in there to help traders, first thing Norm said, put a hezi in there. So sure, we'll see if we can source that data.
Yeah, there was another funny thing was that there was a news came out that the OnlyFans creators that they're under pressure, and no matter how much content they're creating, their sales are down. And that's also funny that when the OnlyFans creator, which they're in the nudity and porn industry, people are not even spending money on that. It means that really the recession has been confirmed already.
Yeah, definitely. That was one of your leading indicators. But that was an interesting tweet that I thought Cardi B sent out. And I was like, it's worth talking about it. Somebody also says, so let me just see if I can go into the questions and see if there's any interesting question came out. Somebody said, strippers are the first to know. Yes, indeed.
So the charting that you see, guys, it's from tradingterminal.com. You can go and check out our trading terminal. We're going to add some academy and courses in there as well. And we also have a free trading simulator. If you want to trade, you don't want to risk your money. You shouldn't risk your money at the beginning. And you can go sign up to stocktradingsimulator.com. I'm going to post the link as well there, and go and practice. And if you sign up there, you go into the newsletter, and we're going to send you actually the homeworks as well, so you know what you're trading.
Yeah, and one of the things, since we got quite a bit of people, I just want to say a little bit about our plans. We're working on an education center right now, really high quality production education courses on option trading, swing trading. We're having Brian come to our studio and record his stuff and his books, really high quality. So it's one of the things we're planning to launch it within the next 3 months is the education center. We're working on a proprietary indicator that we're going to add. We're working on scanners that we're going to add. So Trading Terminal in 6-7 months, hopefully it's going to be an amazing tool that you can go from practicing and simulated trades all the way to all the indicators that you need. So really excited. We're working really hard, from spending money to build the tools, to work with our developers, really long hours, but it's been really rewarding, and the feedback has been really positive so far. Somebody asked, I wanted to touch on one last thing as well, and that was Jamie Dimon's comment about the hurricane coming. Did you hear that, Andrew? Or
no, I haven't.
So, Jamie Dimon came in. I think it was about a high yield conference. So, higher yield conference, and he was asked about recession. He feels like a recession is a hurricane is coming. He just doesn't know if it's going to be a Hurricane Sandy or a hurricane like another hurricane which wasn't as bad. And somebody asked, like, how would they know? You're looking at his spending. He's looking at bank accounts. He's looking at saving accounts. He get access to a lot of alternative data, we call them, like proprietary data that could really help you with making decisions. He's seeing this stuff, and he's warning the investor. Somebody said in the chat room, oh, they're just saying that because they want to buy low. They can't do that anymore. So since 2008 and the financial crash, there is a Walker rule which basically shut down all the proprietary trading of the banks. So the banks can no longer take direction positions like that. So I don't think there is anything for Jamie Dimon to gain here. I know it's counterintuitive, but they're only if they're setting up a trade, or if they're in a trade, it's because a client wants them a trade, or if they're selling a swap to a client and they have to hedge their exposure. They're not making any directional bets after 2008 anymore.
Interesting. Yeah, there is. People would be surprised that there's a lot of, that Wall Street knows everything and they're always right and there's always a head of game. But you read these all the time, that how many people are blowing up their accounts, billions of dollars, these hedge funds. And if their big money knows everything, what is happening on that? Let me for example, bring a tweet that I saw recently, and it was really interesting. I think it was with our friend, who posted that? Brian Shannon. So he posted that, and I'll bring it here. You can show it into my screen. So if you think big money is a smart money, then what are these news that you're saying? Bill Huang lost $20 billion. Cathie Wood's, the biggest drop, and her fund is down almost 60-70%. Tiger Global fund lost 52% of the year just through the mayor. So if you really think that the smart money know exactly what is happening and they're always ahead of a game, that's really not true.
No, it's not true. And if you're staying outside and you're not trading because you feel like, oh, there's a big money that knows everything, you're missing out. And there's only one area that there is a natural edge, and that's when you're market making, because you're buying at the bid and you're selling at the ask and you're eating the spread. That's the only place where you have a natural edge. Anything other than that, it's all about capturing that extra alpha, capturing that extra edge. So whether you work at the best funds in Wall Street or you're working at your desk in your home, in your office at home, it doesn't matter. It's fair game. One of the other firms I wanted to say is, this is the most famous one, is the long-term capital management. Look at their return, and then look what happened. Boom, they went negative. What they were doing, they were using tons of option and leverage. And things went south. Within a span of a couple of days, the whole fund of, I think, billions of dollars blew up. This was one of the one of the more interesting news that came out.
That only happens when you're using leverage. Leverage is the weapons of mass destruction, as Warren Buffett says. The leverage can come in the form of leverage products like TQQ, SQQ, or it can come in the form of options activity, or in the world of crypto, you can have actually with the crypto, there's a huge leverage on the crypto that with a $500 account, you get access to $100,000 worth of crypto trading, which wipes out you really, really quickly.
Yeah, we're having a little problem with Andrew's video right now. He's our producer is working on, but yeah, exactly right. That someone's asking, do you sell options? Yeah, premium selling is one of those strategies that we teach in our community as well. There's a criteria that I have for premium selling. The VIX it should be elevated, but it shouldn't be too much elevated, because we know VIX is the standard deviation, it's movement. So whenever VIX is really high, you have a higher chance of assignments, and when you're selling premium, unless it's a cash secured put, you don't want to get assigned. Or even if you're selling calls, right, you don't want to go higher than that strike price. So we teach that in our community. If you're part of our community, go to the education center in the option. There is a class called Using Option for Income Generation. I get into a lot of details on that. If not, wait a couple more months when we launch our education center on Trading Terminal. There will be a course on that.
So Adi, somebody's asking about, on a serious note, on a KSS. Apparently KSS is having a buyout offer at $60, and the current price is right now $45. Mm-hmm. So this is, we're going to get into actually the Elon Musk situation as well. So what you are seeing here is when you have these buyout offers, they're offers and they're coming under some conditions, and they're not necessarily can go through. If it's a 100% deal, the price would be traded exactly at $60. Yeah. But there are some conditions. You can go into that position and say, if the deal goes through, then $45 to $60, that's 30% profit that I can get, depending on when they close the deal. But you have to accept the risk that the deal might not go through, and then the price might continue going lower. So the perfect example of this is the Twitter deal. Yeah. That the Twitter has, the offer at $54.20, yeah, and the price went very close to that. But as you see, it has dropped significantly in the last 2 months, because a lot of people believe that Elon Musk won't be able to make the deal happen. Either he bails out or he doesn't get enough financing for doing that.
Yeah, and the thing about this is you usually hear about the deals that go through. There's that survivorship bias. You don't hear about the deals that didn't go through. I can give you a really good example of a deal that didn't go through, right? Andrew, can you think of one? It was in the semiconductor business.
No, I don't.
NVIDIA buying ARM. Right, and that deal didn't go through because of antitrust, because they thought if NVIDIA purchases ARM, they will just become such a juggernaut in the semiconductor business that they would. It was a global deal, right? So I think so some countries they were okay with it, but UK didn't vote for it, and US antitrust laws. So the deal didn't go through.
Yeah, I think the last big antitrust the government got involved was I think it was 100 years ago when they break the Standard Oil to different ones. I doubt that the government really get involved too much into the antitrust. But I think that's something that you should definitely consider. If one day Facebook, Google, Microsoft, and Apple want to merge together, definitely there's a big antitrust opposition to that. But I'm not sure really, because I think the last big antitrust intervention was Standard Oil back in 1880 or something like that. It was late or early 1900.
Yeah, not sure. There is that survivorship bias. So the deals that don't go through, Andrew, you won't hear about them. So someone is saying Verizon merger. I don't recall that, but that ARM and Nvidia was one of those examples of antitrust, right? It didn't go through. So it is still happening. It's a big thing. But the major one, I believe that was in the oil conglomerates. Anything that is too sensitive, basically. Social media is not one of them. Has institutional or hedge fund investment in Twitter dropped since the Musk buyout offer? What would this tell us? Ben, that's a good question. Andrew, any answer to that question?
Sorry, what was the question again?
Has institutional or hedge fund investments in Twitter dropped since the Musk buyout offer?
Actually, I don't know. I mean, these numbers are coming out, I think every quarter those reporting comes out. I don't know. I'm not following it directly. I'm not the type of trader that want to find such a deal and then put my money in there and then pops up and make 30%.
Yeah.
I'm the type of trader that I see, okay, I'm going to try get 1% of my account every day from the market. Yeah. It's a different style of trading. I'm not saying there's nothing wrong with that, but I am not the person to look at the deals and, the potential arbitrage that, put my money in there, it pops up and then come out and look for another deal. I'm a day trader, and I'm trying to look for a scalping during the day and see where to get the opportunity and then stay out. So that's at least my style of trading.
Yeah, one of the things that really surprised me was looking at Warren Buffett's the latest filings, F-13 filings, and he increased his position in Activision Blizzard. And he's basically doing a merger arbitrage, buying the Activision Blizzard, basically betting that deal will go through with Microsoft. So he increased his position in Activision Blizzard. I think the deal was at about $82. What is Activision trading right now?
What's the ticket on Activision Blizzard?
ACTV, I believe.
ACTV?
Activision, yeah, ATVI, sorry.
ATVI.
I think the deal was at like the deal is like at $82, $83. And it's at 78 right now, so there's still some room for profit if you want to take that trade. If you believe, like Warren Buffett, that this deal is definitely going to go through, imagine using some leverage, taking a massive position. You can make 5-6% using leverage. You can make 10% on this.
That's
trade.
very, very amazing, Adi. Because if you look at my chart, if you look at my screen right now, guys, you can see the ATVI. I think there is a very good consensus that this deal will go through. See, even if the market has dropped starting January, we had a really massive correction, but ATVI actually has held this support line significantly and doesn't plan to go any lower. That means that the market participants really have high confidence that this deal is going to go through, because Microsoft has the money and the board and the executive management are standing behind this deal. So there is definitely the arbitrage potential that you can park your money. And someone like Warren Buffett that probably has a lot of cash, that's a good use of cash, that you're sitting in there, and when the deal happens, you exit for 5-6%.
Another thing is, like, Warren Buffett probably has access to the best lawyers, so they've looked at all the antitrust, all the different angles here, and they told him, hey, this deal will probably go up, will happen probably by like 97-98% probability. So I think that deal was $83, $84. So this actually could be a good. I know you got a lot of cash, Andrew. This might be a good idea.
That might be a good idea. Maybe we can, instead of leverage product, we can put it in there. So when the deal came in through, the stock opened up at almost, I think it's 80. I think they opened at 86. So I would say it's probably around 86. We can take a look at it. If anyone in the chat knows that, what was that? It's at around 86.75, and then sold off the all day. So It might be near $87. My guess would that be. But it really is holding. It's really, really holding nicely. And I think there is a potential for that to go through. And Elon Musk is really knowing, Warren Buffett knows what he's doing. So guys, I just want to ask you, if you're really enjoying that, give us a like and subscribe to our channel, because it really helps us. And we want to have an organic growth on this channel, and your likes helps us, because the algos on YouTube really like that. When the interaction and the comments are going up, they're bringing up higher and higher and higher. And we really want to have a very organic way of growing this channel if you're enjoying that. So Sal is saying that I think it was mid-90s, and that makes sense, I think. I think if the deal was around mid-90s.
Yeah, 95, 94.
So when they gapped up all the way up to $87, I think that's a really, really good.
I'm tempted to take a home equity loan on my house.
Sell your house and just put it up there.
I think it's a smarter bet than betting in some of these alternative coin in the crypto market. But yeah, that's and again, something to think about. This is called a merger arbitrage trading. It's a strategy a lot of hedge funds use. It's one of the strategies I taught in our education center as well. So if you're part of Variable Traders, you've seen my class on the merger arbitrage. Is called the hedge fund way of thinking, where I talk about different strategies hedge funds use and how you can use them if you're a retail trader, because there's nothing proprietary about them. You can really use them. They go and buy the merger company, and they sell the acquirer. They short sell the acquirer, and they take that profit in that merger arbitrage. One last thing I wanted to say, since Andrew asked about getting some likes and subscribes, when I joined BBT and part of the YouTube, one of the goals that I set for myself was 100,000 subscribers by year end. What an amazing achievement it would be if we can get there. We got 6 months to go. So if you haven't subscribed to our channel and you're new, definitely do that. It would mean the world to us. We put a lot of research and time into this stuff that you see, like all these research that you can see behind me. A lot of time and effort goes into them. So supporting this show, supporting these channels means more great content, more high quality content, rather than bro-like content.
Yeah, so we appreciate, again, guys, we really, really appreciate a thumbs up in our channel. I think that also helps a lot. So what else do we have discussed? Is there any question from the folks in the chat? I'm reading the chat myself.
Yeah, let us know. Nothing in terms of the market, nothing. Today was a strong day. Again, all eyes remain on two key economic indicators are coming out. One of them, of course, the CPI numbers on Friday. The game plan, if you're a trader, if the CPI number comes in less softer than expected, so a little cooler, I would say IEF is a good potential. IEF is a bond index. Bond should probably rally. Yields should probably come down a little bit because again, we're pricing really aggressive rate hike. If inflation is actually slowing down, then bond could be a good play. If inflation is hot, you probably can short equities and make some money. So that's a game plan if you're a trader. We're also getting consumer sentiment numbers, I think tomorrow. So that's one of the things that I will look at as well. If you see some kind of a bottoming action in consumer sentiment, that means consumers are going to spend again, and that's definitely a good sign if you're a trader to go long equity. So two key data that I'm looking at in terms of economic. David is asking, based on your trading style, 1% a day, do you even hold any long-term investment? Andrew, that's a question for you.
Yeah, so I do. So I do have a day trading account, and there's a big account. There's another account that is for corporation, and for that one, when your account goes bigger and bigger and bigger, and you can day trade with an account $100,000-$200,000, but when your account is getting significantly bigger, then it's hard to get 1% through that, and that's why a lot of people say that if 1% a day it's possible, 200% a year, why Warren Buffett and stuff, they're not doing day trading? The answer to that is you can day trade with a small account account. But when you have a very big account, then you can't day trade because the market is just not liquid enough. You can't just come buy, MU and Apple. You have to come and buy all of them. Every share is in the market. When you have like a $100 billion account. I mean, I have a bigger account that I was trying to hold some positions on that. It didn't go really well. Now I had that TNA situation. Now I have a mix of a SPY and some leverage product of a SPY for the move back up. But that's the goal for that one is more longer term. But yeah, you should definitely have, depending on your account size, you should have for the longer term growth that you can expect 5 to 10, 15% return a year, and the other one that is you can have the smaller account for 1% a day.
Just to add on that a little bit, David, because I think that's a great question, is you see our peak capital trading, you see the logo is a triangle, and that kind of represent of what we do. We have a private equity division where Andrew and I invest in some real estate and private equity deals. We have a peak capital wealth where we're managing some friends and family, and then we have our proprietary desk. So that's kind of the reason the peak capital trading looks like a triangle showing kind of the three divisions. So when the money gets a little large, of course you want to diversify. You can't have all of it in public equity. You have a little bit of private equity, a little bit of this, a little bit of that for diversification purposes. And one of the great things I would say about private equity is you don't have to worry about mark to market every single day. Like, you wake up every morning, you look at your phone, you look at your desk, and you're seeing your positions being marked down or marked up every day. With private equity, you don't have that. You don't have to deal with that. So that's one of the benefits. Psychologically, it's a lot easier to handle.
Yeah. So make sure, guys, the tools that we are creating for you, it's very important that guys, it's very, very important to use it and give us feedback. The tradingterminal.com is free to use. We're gonna add more features than that. The stock trading simulator is another one that we've created for you, and we welcome everyone go to use that. And obviously, if you're interested in trading education and trading live next to us, Ardi and I going live, trade live, screen share, see our accounts, check out Bearable Traders and let us know what you think.
Exactly. I gotta give a quick shout out to all of our amazing community members and people that trade with us, from Tor to Jared to John to Mike, everyone adding so much value. So shout out to them. The only reason they're not here is because we're in Vancouver and we're doing the live. We have not forgot you, and we really appreciate all the hard works you're doing and the value you're creating for the community. Definitely check out this little sign here that you'll see, a trading terminal. All the tools that you need, from simulator to all that stuff, is in there. Andrew, I would say it's good for today. We covered a lot of stuff. Tomorrow, again, a really important day, really big day. We're gonna have our first one of our traders come in the show, talk about his experience. He's mostly an option trader, and we've been in touch. So he's been day trading and option trading. But again, if you're a consistent trader, shoot me an email. Let's schedule a call, and then we'll love to have you on the show. And of course, if you have any feedback about this show, about the format, do you want more of this, do you want more of that, let me know, and I can definitely incorporate it. This is a show for you guys, for us. Andrew?
Yeah, thank you so much, guys. Looking forward to really, trading with you tomorrow. Tonight, there is a very, very important webinar by John. John is going to talk about his trade book, Break of High of the Day. So if you want to see how to build a strategy, stick to your risk management rule, and go through that successfully, then definitely that's the webinar that you guys should all attend. Yeah,
really excited going to see that. John is one of the most disciplined people you ever meet.
Military guy.
Military, definitely. And this is like, even I was reading the Alpha Trader, a book by Brent Donnelly, and he was saying the best traders he's seen on trading floor when he was working at Lehman were people with a military background. So this is like a fact, really. And John is really, really, he has this break of high today. He doesn't care if it's a bear market and there's not a lot of opportunities. He sits at his desk like a sniper, ready. And when that opportunity comes, he takes it. And he's so transparent. He shares it on his Twitter if you don't follow him. His worst trade, his best trade. Every day. and this is my worst trade. This is why it was the worst trade, and this is my best trade, and why it worked out. So really, really great stuff. If you don't follow him, make sure to follow John. Looking forward to that webinar. With that said, that brings us to another show going live. Thanks everyone for joining in. Definitely subscribe to our channel if you haven't already, and we'll see you tomorrow for another awesome session.
Awesome. Thank you so much, guys. And yeah, looking forward to see you all. Bye.
Thanks, guys. Thanks, Cesar.